meeting is just 1 week away. And when I say final, I just mean the final Fed meeting of this year, 2025, but also probably the last Fed meeting where anybody pays any attention and gives any weight to Jerome Powell, because his replacement is going to be getting announced pretty soon. Also, just 2 weeks from now, we will have the Bank of Japan doing their meeting to decide whether they're going to raise interest rates in Japan and wreck the entire carry trade. We got to talk about that. There's also a new video from Richard Hart that we can take a look at today. And ADP job numbers have been released today, which also gives me an idea of what is a good way to determine, are we in a bull market or are we in a bear market? Have we been in a bull? Have we been in a bear? Got a good way to determine that I'll show you today. Also, Ethereum had the Fusaka upgrade today. What does that mean for your crypto bags? Is that a good thing? Is it a bad thing? What is it? And of course, we got a lot more to talk about when it comes to the yen carry trade and how that's going to affect your bags. I'm Cairo Copeland. This is Reinvent Ideal, and you are watching Shut the FUD Up. Welcome to today's very special episode of Shut the FUD Up, where, man, we just got way so much to talk about today. So go ahead and start sharing the screen and get right on into it with you guys. So let's have a peek here at how the market is doing. And oh my, looky here. It looks like we actually got some good stuff happening. Bitcoin has turned positive on the year-to-date chart. It hasn't made more than 1% on the year, but at least it's turning positive. And that's something. Like, we may actually have a positive December. Let's see, what's the month-to-date look like here? Did I have that in here yet? I don't think I did. Well, they don't have month-to-date here, so I can't see. But it's possible we have a green December. I wouldn't put too much weight on that, though. There's still like way too much that can happen that can make stuff go bad. Still way too much going on with worldwide liquidity. And also, it's the last month of the year, the last month of what I knew from the start was going to be a terrible, absolutely terrible quarter. Because I've been saying this since September. Q4 is going to suck. There's no reason to think anything good is going to happen with Q4. Some people are thinking, oh, yes, we're going to get a new all-time high before the end of the year. I know Tom Lee is out there saying stuff like that. Hey, I love you, Tom Lee. I appreciate the bullishness and everything, but I can't follow your logic here. Now, the one thing that I will give him some credit on is look at Ethereum. I mean, I still think it's a piece of trash and it's underperforming in the most embarrassing fashion this whole cycle. But oh my, it's not only back above 3,000, but comfortably back above 3,000 at 31.51, which we got to give it some flowers here, because for a coin that has underperformed all cycle and has been on its knees on broken glass, sucking off Max Kaiser, well, that's incredible for Ethereum to be doing what it's doing right there. XRP, the number 3 coin, really. I call it the number 3. I mean, I think Binance is actually... Well, let's check here. I think XRP is the number 3. Yeah, after a Tether, XRP is number 3. Here's what's interesting about this to me here, about this coin, is that the mainstream crypto streamers never shut up about it, even though it's gone completely sideways all year long. Year to date, things only up 6%. It's done nothing but oscillate between $2 and $2.30 all year long. But the mainstream crypto media just can't shut up about it. There's always a story. Like, take a look at Wendy O's channel. Every single one of her thumbnails, practically, is something about XRP, when XRP is not doing a gosh darn thing. in terms of price. I find that so funny. I find it so incredibly funny. Solana is having itself a good day. Hyperliquid kind of shooting back here. Now, here's the thing. What I love about Hyperliquid is that this, along with Aster, is absolute 100% proof that doing token buybacks is an incredibly stupid idea, because every time they do one, the price goes down, and it goes down a lot further than it was before the buyback. The proof is right there in front of people's faces, but they keep saying, oh, Richard needs to buy back his coins with the DAC money. Every coin that does that, it doesn't help them. It backfires. I've said it once. I'll say it again. I've probably said it a bunch of times, actually. Coin buybacks don't work, because all it does is it attracts the wrong people who are looking to make a quick buck off the coin. They all ape in, and they sell immediately after the buyback is done. All right? See, it's just like with stock dividends. You see, when a stock pays a dividend, you'll notice that the price of the stock goes down by the exact same dollar amount as the dividend being paid, or it goes down by the exact same percent amount as the dividend being paid. So really, when you get a dividend from a stock, you're just kind of getting your own money back, and you're getting a tax bill for it, because nobody's going to buy the stock the day after the dividend is paid and expect to pay full price when they're not getting the dividend that was probably attracting them to want to buy the stock to begin with. It's no different here in crypto. So whenever you see these people complain and go, oh, he needs to use the SAC funds, you can write that idiot off as a complete financial illiterate, probably a functional illiterate as well. And look at this here. Like, what's been interesting to me is watching Zcash. It's having a good day here today, but man, like this past week, it's gotten kicked right in the teeth. Because you see, this thing was up above, like, it was up at like 550, and then came all the way down to just above $300. And this has been like the storybook cycle darling, at least of right now. Everybody's going, oh yeah, Zcash, Zcash. And then it gets chopped right at the knee like everybody else. It's not immune to the overwhelming forces of macroeconomics and the macro market. See, all these people are trying to say, oh, no, Bitcoin is going to go down. The cycle is over. One person in particular I want to call out, in a friendly way, though, is Shill Gates. Shill, you're running around out there saying that the cycle is all over. I got a ton of data to show that no, that is not the case, that it's not all over. Why don't you come on this stream and let's talk about it? It's not an argument. It's not a debate. It's a discussion like I had with T-Bird, like I had with Pedro. I never say anything bad about those guys, even when I deeply disagree with any of them. I never say anything bad about them just because they came on this stream. Shill, why don't you come on this stream and let's have that discussion for the benefit of the viewers. He was responding to me before I invited him on, but the moment I invited him on, he stopped responding to me. He really doesn't want to face the fire, it seems. If I'm wrong, Shill, come on and prove me wrong. I'd be happy to have that discussion. All right? Here's what I think is going on with that, though, is that he knows I've got data. He knows I've got charts. He knows I have several facts after facts after facts after fact to support my view, and all he has to support his view is, it's the end of 4 years, so it has to go down because 4-year cycle, bro. I'm thinking that is why he doesn't want to come on, because he's got nothing else to support his argument other than, it's time. Time tells the market what to do. If I'm wrong, Shill, come on and let's have that discussion respectfully. It's an invite. I'm respectfully inviting you on here. I'm not trying to make you look stupid or anything. I don't make my guests look stupid. We have very civil discussions. Let's have it for the benefit of the audience, all right? Instead of running around on X saying, oh, no, it's all over, and then people are going to make the wrong move on that idea. They're going to make the wrong decisions. They're going to sell their coins, and they're going to miss out on all the good stuff that's coming. Because I'll tell you, there's a lot of good stuff coming. It's not coming this year, but there's a lot of good stuff coming next year we'll talk about. All right? Now, it seems that the EtherFi and Athena have been having really good days here. I do think that they'll get kind of chopped right back down, though. Because you see, these coins that are running off of fee collections or have like some sort of cash flow, like a lot of people are thinking, oh yeah, those are the coins you want to invest in this cycle because they're the ones that actually do something. And many of these other altcoins, they're all just going to die or they're not going to go up again because that's the nature of these cycles here. Or they're saying that's the nature of this cycle. That this time you can't just pick any coin and make money with it. You have to go with ones that have utility and make money in some way and have cash flows. That's what they're saying right now. I got a feeling, though, that that's going to be proven false just because of how many people are saying it. Here's what I mean by that. A lot of people are saying that, and what the market loves to do more than anything else, and here's if you want to be able to make predictions, here's one prediction you can very easily rely on to be true. Something that the market will reliably do is make as many people look stupid as possible. All right, so when you hear a lot of people saying the same thing, you can take to the bank that they're probably wrong and the market is going to disprove them because just about everything that happens in the market, everybody goes, oh my gosh, nobody saw this coming. We have no idea what's going on. Just the day, I think it was yesterday or maybe the day before yesterday, all these people on CNBC are just going, oh man, we don't know why Bitcoin is down. Oh no, we don't know why Bitcoin is up. We don't know what's going on. Because what happened did not fit their prediction. It didn't fit their preconception of actually what was going to happen. Now, here's something interesting right here. BAT, the basic attention token. This is an interesting one here to me. I think that it's riding on the whole privacy trade that was pushing up Zcash, pushing up Monero, because BAT is connected to the Brave browser, and Brave is known for being a privacy browser. And as this thing starts climbing right here, well, this is very impressive. Maybe it can actually get back into the top 100. Kind of hope it does. We'll see about that. Yeah, let's take a look here at the Pulse Chain ecosystem. Does not look pretty here. Nope, does not look pretty. So here's what's going to be interesting to talk about with the RH, or the new Richard Hart video, is that he puts out this video to try to reassure the community, reassure the investors that, hey, I know what I'm doing. And more people just sell out of these coins. Now, I've been hearing a lot of, or I've been watching a lot that's going on in the timeline and seeing all of the, well, we'll just call them capitulating bitches, the capitulators. That's what we should call them now, the capitulators. And I'm talking guys like Corey Costa, who found something to complain about. I mean, here we got what we were asking for. We got Richard to give you proof of life and to address your specific concerns, and that was the proof of life. He was like, oh, no, it doesn't count because he didn't live stream. Okay, so what do you think? You think it was an AI or something that was made the video? Yeah, I think it was. Okay, well, how is it that he was answering questions that were directly submitted to him over X? If he's dead, then what? Yeah, the person that's running his X account, that y'all think it's another person that's running his X account, you think that person also made the AI video and it's like Mission Impossible and he's wearing a Richard Hart mask or something. So yeah, Corey Costa found something to complain about. He always finds something to complain about. He's never happy. So I just say to him, bro, just sell now, man. Just sell and get out, because clearly nothing is going to satisfy you and make you happy, because I'm pretty sure that even if these candles turned green, if we were looking at a whole bunch of green on this screen right here, we were looking at massive gains and everything, y'all would still find something to bitch about. So please, just sell your coins and get out, because you know what? We don't want you. And that's not just for Costa. That's for every single one of you people that are going all bearish and everything, going, oh, this is horrible. What do you want? Apparently, what they want him to do is what I debunked already. They want him to use the SAC money to pump these coins, even though the time he did it, it immediately got sold down, and every other coin, every other project that has done it, it immediately got sold down. Can't do much more for you guys. He's the one that just creates the coins. You guys are the ones pressing the sell button. Because I've seen you guys go, oh, he gaslit and he blamed the community for his wrecked charts. Is it his fault that the charts are wrecked? I mean, does he have the ability to send a little bot that hacks your computer and goes into your wallet and presses the sell button? Or do you press the sell button? Who presses the sell button? All he does is create the coins and put them out there for you to buy. It is on you to press the buy button or the sell button. So I didn't hear him blame the community in his video for the wrecked charts, but apparently all of these capitulators did. But even if he did do that, even if he did say it's your fault, he's right. It is your fault because only you can press the sell button. How about the stories going on in TradFi on CNBS? Interesting stuff going on right here. We're still in the bad news is good news because that's this story right here. The Dow closes 400 points higher as ADP jobs data, which is bad, strengthens Fed rate cut hopes. We'll take a look at the CME on that here, but let's take a look at this story. Payrolls processor ADP reported that private payrolls surprisingly declined by 32,000 jobs in November. Is it really surprisingly? Like, are any of y'all surprised? Any of y'all shocked going, oh my gosh, the job situation here in America is bad. I certainly didn't expect that because, it's just so easy to go and find a job right now, isn't it? You tried finding a job lately? But I'll tell you what, see, now I don't have to do this because, you see, I got a very nice source of income. You see, this is why I'm not getting emotional about crypto going down, or I'm not ever complaining. I'm not capitulating. I can ride Hex and all of the other, I can ride all of crypto investments, all of my crypto investments. I can stay with them for the next 10 years, maybe even the next 20 years, even if it's just a sideways chart and it's all red. I'm not going to be happy about it. I'm just saying that I could sit through that because my source of income is not Hex stakes or ink rewards or liquidity pool farming. My source of income's got nothing to do with that. I'm not dependent on the money that I have invested in crypto. I've got a source of income that is very reliable. I really want to share it with you guys. I want to tell you guys what it is. It's not a traditional job or anything. It's a business I run. I would love to share it with you guys, but I'm afraid to do that because, you see, if you were sitting on a money printer, would you want to tell anybody about it? I'm not saying that it's a money printer in the sense like it's easy money or anything. I'm not saying that. I would love to share it with you guys because I don't like keeping anything from you guys. But if I tell people about it, well, then probably it's going to ruin whatever profitability it gives me, all right? But I'll tell you what, we'll make you a deal here, all right? If I get up to 2,000 subscribers, then I will tell you what my source of income is, all right? It's an online business. You'll never guess it. And it's not YouTube or anything. It's not. It's definitely not OnlyFans or webcam or any of that crap. I got out of the sex work business when I stopped being a stripper. All right, and it's not my coaching business either because I don't really do that much of it anymore here. Like now, like the concerns that guys have is not, oh, how do I get the girls? It's all, how do I make money? Which is why I do this now. All right, I see SW. I see your question there. We will get into that. We'll answer that question. All right, but here because I got a good source of income, I don't have to do this, but I do it for to get an understanding of what's going on in the economy. I apply for jobs on Indeed just to see what's out there. I look for jobs on Indeed first. If I see something interesting, I will apply for it, and sometimes I do it just for revenge. Because I'll tell you what, when I was in financial services, something that really ticked me off all the darn time was when you'd apply for a job as a financial advisor, and then the company contacts you back and says, oh, well, do you have your own book of business? Do you have your own clients? I'll tell you, if you want to be a financial advisor and you see a company that does something like that, you know that company is immediately a scam company. You don't want to work for them. They are not legit. They're absolute garbage. I'm talking companies like Edward Jones, Morgan Stanley, Northwestern Mutual. Don't work for those guys. They're nothing but trash. So I was doing like some revenge applying here. We're like, I applied for a job. They send me a email saying, well, do you have your own book of business of high net worth clients that you can bring with you? And so just for the fun and for my own personal satisfaction, I replied to the email by saying, excuse me, if I had my own book of business and if I had my own clients, I wouldn't be applying for jobs now, would I? And I do it specifically to troll these companies, to insult these companies. I do it for the fun of that here because it's very satisfying just because like these companies that I worked for in my past as a financial advisor, they were very borderline abusive and sadistic to me here, so this is my revenge for it. But why I'd go on Indeed and look at the jobs being offered is to see what a pain in the ass it is to get hired, so I understand the economy better. And I see that it is an incredible pain in the butt right now to get hired. It's an absolute pain in the butt. This is also why markets are down, why all of the coins are down, because the people who would typically buy these, people who are born after 1980 or later, they're the audience that would buy these coins. They can't even get jobs. You see, this is what I was trying to explain to Shill Gates, and he just didn't want to hear it, is that the reason 2025 was not a bull market, I don't care what they say. He goes, oh, well, XRP made a new high, Binance made a new high, Solana made a new high. No, it didn't. And Bitcoin made a new high, and a whole bunch of meme coins made new highs. So 2025 was the bull market. You named off like 5 coins and meme coins. Meme coins randomly pump in bear markets and bull markets, so there's no sign of any bull market. We can eliminate that completely. And the coins that you did mention, well, there was a very few of them, and it was very isolated pumps, pretty far in between each one of the two. As a matter of fact, like Solana posted its new high in January, and I think so did XRP. It posted its new high in January, and it had been nothing but downhill ever since then. The only one that got a pop later, or 2 of them, was Bitcoin, which I told you it's all due to basis trades done by hedge funds. And the other was Binance. And when you know how Binance works here, like how the BNB token works, is that one doesn't do well because the market is doing well. It does well at the expense of the market because of their fee structure. So it's no sign that we were in any sort of bull run. In fact, I got proof that 2025 was most likely the bear market year. I'm going to share it with you here today. But because everybody that would buy these coins is struggling, they don't have the money because they don't have the jobs, which you need them to have to buy your coins and be your exit liquidity. They don't have the money to do it because they don't have the income, and they don't have the income because they don't have the jobs, and they don't have the jobs because the economy sucks. Why is this so hard for so many people to understand? This is something that gets me really fired up right here. You guys, I want to say this to the Bears in the most condescending way I possibly can here. I don't mean to like say it condescendingly to Shill Gates because, I respect you and everything, but I got to say this to all the Bears like you that say the cycle is all over. There was no cycle that even began. There was no bull market that even began, or if it did, it ended in 2024 right at the end, or it ended in January this year, because here's the deal. In order for there to be a bull market, prices have to go up. In order for the prices to go up, people have to buy the coins. For people to buy the coins, they have to have money. For them to have money, they have to have jobs. For them to have jobs, the economy has to be good. And the economy is not good, and that's what this ADP report confirms. So, gosh darn it, will you people shut the FUD up about the cycle being over, because 2025 was nothing but a bear market year.
Sometimes you just gotta shut the FUD up.
get a little fired up here about this and everything, just because, like, the repetition of the same stupid talking points that I've debunked a gazillion times. I'm getting to the point where it's just like, I'm tired, boss. I got to keep cleaning it up here because people just refuse to let it get through their thick skulls. All right. So economists polled by Dow Jones had expected an increase of 40,000 jobs for the month. All right, so there's 40,000 jobs that weren't there, and then there was also a loss of 32,000 jobs. So wow, you economists, you guys had your estimates off by a whole 72,000. Why do we employ you people? Despite the tough reading, traders were likely betting that the private job losses will lead to the Fed to slash rates at its last meeting of the year on December the 10th. That's right, that will happen. And it's not just the CME that is predicting that. I mean, you want to take a look at what's really predicting that. Take a peek over here at the interest rates, particularly the 3-month Treasury. You see, what the 3-month Treasury does is it tells you where they think the federal funds rate is going to go. Like, if the CME website was down, well, you could always check the 10-month Treasury. Because here's what the CME's got. It says 89% chance that they cut the rates. All right, so the current rate, the lower bound is 3.75, and the upper bound is 4%. When they cut it, it goes from the range. It goes down to the range of 3.5 to 3.75. If the 3-month Treasury is below the upper bound, which in this case, or below the lower bound, below the lower bound, which in this case is 3.75, you know they're gonna cut. Because there's trillions of dollars being traded in the 3-month Treasury market. And when you use the law of large numbers, the more people, the greater the sample size of opinions that you get, the cleaner the average opinion is, or the more accurate it becomes. And that's what we say, law of large numbers is like, even if I get a bunch of bad numbers, if I get a large enough sample size of it, I can pull a good number out of it. It's how insurance companies work and stay profitable. Look at that 10-year Treasury down at 4.06%, down from where it was here. I mean, it's not a great move just yet, and it has been lower. It has been lower here, but still, it kind of just hugging that 4%. That 4% line right there is interesting. I think that does come down a little bit after the last rate cut of the year. I do think that there's a chance it can shoot right back up, though. I'll tell you about that. It's got to do with the Japan carry trade. But take a look here at this. Like, here's the real interesting thing of the day here is the DXY had taken a very steep drop at the open today. Look at this here. It opened at 99.34 and then started keep going on down all the way to 98.85. Y'all remember that once upon a time, there was this one guy who said, oh, the DXY doesn't matter when it comes to crypto because Bitcoin did just fine despite what the DXY was doing. DXY down today, Bitcoin go up, crypto go up. I love being proven right time and time again. See, this is why I can't get people to come on my stream here, is because they can't argue with the fact that I'm always right, and the only person that you ever need to watch as far as a live streamer goes is me. I don't really think that. I just like saying that. But hey, I have helped my viewers make money. There are some of you that can attest to that. And I was way ahead of even the mainstream media when it came to like this whole carry trade chaos. So pay attention, because there is a lot of good that happens to you when you listen to me. Now, do we have any other important stories here on TradFi? Yes, we do here, actually. This is something that Scott Bessent had said today here. It says, the Trump administration will be able to replicate tariffs even if it loses the Supreme Court decision. What that tells me is that they are expecting to lose the case at the Supreme Court. And so they're giving reassurances to investors, the rest of the market, particularly like the treasury bond investors, trying to give reassurances that, hey, don't worry, if we lose the case, well, we can still fund the government in other ways. They are expecting to lose that case then. All right. A little bit of housekeeping right here. If you want this book for free, it's called Your Parents Were Wrong, Debunking and Replacing Outdated Advice. You can have this book for free because I will give it to you for free if you just head on over to my Substack, which is reinventideal.substack.com. I repeat, reinventideal.substack.com, and just click right here where it says free gift. And then when you sign up for my Substack, I will email you a copy of this book for free. And that's the deal that you get to pick up on. That's my free gift to you, just as a way of saying thank you for watching my program.
Hey man, just want to let you know that sometimes you gotta shut the fuck up. And this current time is just one of those times you gotta shut the fuck up. I don't think you're a bad person, I just don't want to hear you talking anymore. You gotta shut up.
Now, moving on to like the next story here, check this out. The Japanese bond yield, like they got a 40-year bond out there in Japan. I don't think we have 40-year bonds here in the United States, but not with treasuries at least. But the Japanese government bond, they got 40-year bonds out there, and that thing is above 5%. Now, in the United States, I think our 30-year bond, which is the longest one that we have, it's not even that high. It's 4.73. But as you can see here, like borrowing at the 40-year rate in Japan to go invest in even any of the treasuries here in the United States makes 0 sense now. That's kind of what we're talking about with the whole carry trade unwind, but it gets a little bit messier than that, though. Now, I don't think this is going to be a problem for us in the near future just because now everybody is talking about it. You see, after I started covering it, well, then everybody started covering it because I'm just that influential. No. I'm just, I was ahead of everybody here, but here's the deal is like now that everybody's talking about it, it's less likely to happen because what does the market love to do? It loves to do whatever is going to make the most amount of people look stupid. So because everybody is talking about this now, it's probably not likely to happen. But at some point, it is going to happen, and the damage that it can do runs a lot deeper. Now, let's talk a little bit about the damage that it could do. You see, it's more than just the borrowing money in yen to go invest in higher yielding foreign assets like U.S. bonds and U.S. stocks and even crypto. I mean, Japan had been like the World Bank kind of funding the global leverage situation all along. It had been like the backbone of the free money economy. It's about to lose that, but there's more to the story than that. You see, what we know about Japan is that they don't have a lot of natural resources in their main lands. And I don't think that they have a lot of natural resources offshore. Like, I don't think they do a lot of offshore drilling in Japan. They don't drill for oil on the mainland, or at least not that much of it. They got to import it. All of their oil they have to buy from other nations. The one source of energy that they do is nuclear energy. They do that very well, but they don't like doing it for obvious reasons. Now, because they are buying lots and lots of oil that has to get shipped in from overseas, what's that oil priced in? It's priced in yen. And as the yen gets weaker, which it's happening there because the government is spending a lot more money in Japan, as that yen gets weaker and these bond prices go down and those bond yields go up, what gets more expensive in terms of yen when it's paid for in yen and priced in it? Oil. Oil will get more expensive. And that's a problem for a country that is so heavily dependent on oil imports to really provide energy for its economy, for the entire country. It's a huge problem when their main currency, or their only currency, the yen, is getting weaker and oil gets more expensive in its price. So what do they have to do? They got to strengthen the yen somehow. How would they do that? How would they strengthen the yen? What they would do is they would sell some of the assets that the government has on its balance sheet. What are those assets? U.S. treasuries. Basically, the Japanese government is also in on the carry trade. So, my lady, Sine Takeshi, her government has got a balance sheet where they own U.S. treasuries as an asset, and then some loans from the Bank of Japan as liabilities or some other Japanese bank. And the problem here is that if the price of oil in yen goes up, the only way they can strengthen that yen is to sell their assets to go buy some of their Japanese government bonds. They're going to have to sell off treasuries and buy Japanese government bonds to push the Japanese bond prices up, which will strengthen the yen because now there's more purchasing power applied to it when the price of these things is not being eaten alive. All right, when the yields are under control and everything. So we would have a stronger yen in that case, but you see that would hurt the United States Treasury market because Japan is the largest foreign holder of U.S. treasuries, of U.S. government debt. When they offload a whole bunch of that debt because it no longer makes sense to keep it and they have to strengthen their currency, all that debt goes on the market and somebody's going to have to step up and buy it. When that happens, unexpectedly like that, the yields on U.S. treasuries will shoot right up. What do we do then when the yields on U.S. treasuries shoot up? Because you see what that means is that the interest on the national debt is going to be a lot more expensive. So what do we do in that case?
A legitimate question, young man, deserving a legitimate answer. Now then.
We got no choice but to turn on the money printer at the Federal Reserve. So if this does happen, if this trade further unwinds and the Japanese have to sell their U.S. treasuries, it's going to get ugly for a couple of days, possibly a couple of weeks. But there is no getting around it. They will absolutely have to turn on the money printer at the Federal Reserve, meaning the U.S. Federal Reserve is going to have to buy the treasuries from Japan that Japan is dumping onto the market to keep interest costs of the government under control. That's what's going to happen. And say, somebody might ask me, well, why would they want to do that? Like, why would the Fed care if interest costs are under control? Because maybe they should keep raising interest rates to punish an irresponsible federal government that passes these expensive budgets and wastes all this money, not just taxpayer money, but borrowing all this money in the form of treasuries and wastes it on garbage like, you've seen all the fraud just in the SNAP benefits. There's fraud in all aspects of welfare. Social Security, Medicare has a whole bunch of fraud as well. I'm not saying all of it is fraud, but there's a whole bunch of it that Doge uncovered. They decided not to cut any of it, of course. So if the Fed wanted to punish the federal government, wanted to punish the United States, what they would do now is they would raise interest rates so that we had a greater interest expense and discourage Congress from being fiscally irresponsible. That never happens, and here's why that never happens. I mean, it happened probably with Volcker. It was the last time that it happened. But the reason why it rarely happens and why it's not going to happen this time is, for one thing, ever since Reagan, a president has usually gotten the monetary policy out of the Fed that they have wanted. You have ways of influencing that beyond what you and I see at all of these Fed meetings and press conferences. But also, we live in an era now of fiscal dominance Because here's the deal. The national debt is never going to get paid off, ever. It has been paid off only a couple of times in American history. I think that Thomas Jefferson was one that did it. And Grover Cleveland, I think, was close to paying it off. Under Bill Clinton, that was the last time that we ever had a surplus. But ever since then, not only have they not even made an effort to pay off the national debt, but they've actually been running deficits on top of that. So we're always spending more money than we take in, and we're not paying back any of the money that we owe. We just keep rolling it over and pushing it out further. Why do we do that? What? I mean, wouldn't it be a good thing if we paid off the national debt? No. I love the idea of the balanced budget amendment. I'm all for that. But paying down the national debt, can't do that. Because if you do that, you will erase the entire treasury market. It will cease to exist. That will wreck the economy all across the board and all across the world, because the treasury market is meant to be the safe haven that everyone can turn to, and you can always buy a treasury to offset other risks that you're taking. Mutual fund managers, portfolio managers, financial advisors, they all do this here. Like if they invest in something risky like a stock, but their charter says they have to maintain a certain level of risk that is below X amount, well, how do they offset the risk of the stock that they bought or the crypto or the whatever? They buy a treasury. Because if I buy a risky stock and I buy an equal amount of a treasury, I've offset the risk completely, or figuratively, really, because a treasury has some risk. It's just there's no risk of default. So without a treasury market, there's no risk-free income source. We can't pay off the national debt for that reason. We have to keep it going because it keeps the treasury market alive. If you erase the treasury market, you would absolutely wreck the entire world's economy. Now, because we never pay off the debt, that's why we have what's called fiscal dominance, which means the federal government tells the Federal Reserve what they're going to do. It's not the other way around. So, because we have this going on, the Federal Reserve will have to capitulate, will have to either do aggressive interest rate cuts or aggressive quantitative easing by buying a bunch of treasury bonds and putting them on the Fed's balance sheet, getting them out of the market to reduce the flood or reduce the amount of them that are out there on the market, that there's not enough liquid cash money to buy them with. I've said this on Tam Tam Spaces last night, that there needs to be a balance between the amount of debt and the amount of liquid cash that's out there. Like, let's see, how can I do this? Can I use this here? Use this. All right. So I'm going to take this here, my CFP card, and I'm going to take this here, my dollar bill. All right. Let's pretend that this card is a debt note. And then let's just pretend that this is money. I mean, it is money, so we don't have to pretend. But there has to be a balance between these two things, or at least a manageable ratio. I can't have a whole bunch of debt here with very little money in the economy to buy it with. And then the opposite is also true. I can't have a whole bunch of this money here that is being lent out and circulated through the economy if there's not a bunch of debt like treasury bills or bonds or notes, whatever. If there isn't a bunch of notes and bonds out there to absorb all this money, we're going to have imbalances in the economy. Now, when you have more money than bonds, more money than debt, you get asset bubbles. When you have more bonds and debt than money, you get a financial crisis. Like 2008 was a financial crisis. Like 2020, there was a financial crisis brewing even before the pandemic. 1994 had it as well. 1987 had this exact same problem. There was too little money for too much debt. what had to happen is the Federal Reserve had to step in, create more money to buy up the debt that existed in excess. There's a ratio that is safe. It's typically like 2-to-1. We can have the bond market be twice the size of the liquid cash money circulating the economy and still be okay. But once you go above that 2x ratio, we're no longer okay. We could run into a financial crisis. So that's what's coming here in the in both the Japanese and the United States government debt market. Now, the Japanese 10-year bond is the one that everybody's really watching because it's rising higher above levels that it was in 2008. You see, in 2008, there was also a bit of an unwind in the trade as well. And the yen assets now look a lot more tempting to large holders of yen, or people, very rich people in Japan, or people that have a lot of yen. So investors may borrow from overseas banks, may borrow abroad now to go invest in Japan. And that's going to trigger a sell-off in foreign assets, or assets that are not Japanese, namely treasuries. So we could have treasury supply surges. We could have higher yields, higher volatility. August 2024 saw this here when the Japanese stock market, the Nikkei index, got down 10% in one day. We could see something like that happen again. And then the weakness of the yen, historically, that's always been an indication of what the risk-seeking appetite is all across the world. Because retail Japanese investors, when they're fleeing inflation, well, they'll pour their money into U.S. assets like AI stocks, like NVIDIA. I mean, it's a big part of why NVIDIA is pumping so hard like it has. Not just the passive bid, but also the Japanese are buying a lot of it. But if you take a look at a chart that shows the ratio, or it shows the relationship between dollars and yen, and you compare it to just the chart of the NASDAQ, what you'll see there is that as the yen depreciates, the NASDAQ goes up. Matter of fact, let's see if I can find a chart like that. Imagine Fidelity has a way to look at that. Well, I don't know if I can find that chart exactly, but what I can do is I can bring up the exchange rate for the yen and the US dollar. And then I can also bring up a NASDAQ chart. Or actually, I don't even have to go there. I can do it here. Have a look here, see if there's a bit of an inverse relationship. I'm going to pull this up here. Look at a 5-year on this. Shame they don't let me compare. And then look at a 5-year on this. All right. So let's see. We had this going all the way up in the year 2022. We had the NASDAQ going down throughout all of 2022. Smells like an inverse, right? And then going up throughout the year of 2024. Well, this here, towards the second half of 2024, going down. There's an inverse relationship there between the strength of the yen and the rise of the NASDAQ. Just because so many investors in the NASDAQ are Japanese investors that have a lot of yen that they want to protect. So what they do is they convert the yen into US dollars, they buy the NASDAQ, and then when they need the money, they sell the NASDAQ and convert those dollars back into yen, which they get a lot more yen for those dollars. So that's what's happening here with the carry trade so far. Now, when the yen gets stronger, they do less of it. How does the yen get stronger? Interest rates go up on Japanese bonds. That's what happens. So the outlook here, like what everybody's kind of predicting, is that the Bank of Japan is behind the ball on recognizing the inflation problem that they have, or the weakening currency. So the yields, they're spiking a lot. It's not so much the intensity or the height of the spike, but the frequency of the spiking that's occurring. The banking system can go insolvent if those Japanese bonds were to just completely sell off. If there was a complete sell-off in it, and the yields go real high, like as high as our yields here in the United States. Because the problem with it is, like, they view the Japanese bonds in Japan as safe collateral. And if it's declining in price and increasing in yield, well, that's not really safe then, is it? So they call it a Liz Truss moment, which refers to the gilt crisis that they had over in the United Kingdom. Gilts are just the UK's version of treasury bonds. There was a crisis like this once. And in Japan, like, what would be a crisis is a 5% yield on, say, like their 10-year bond and their 20-year bond. Now, the Bank of Japan, they may do some rate hikes, but they're going to feel and communicate kind of a sentiment of panic on the part of the Bank of Japan. They could also sell treasuries to support the yen. Talked about that before, and that spikes the U.S. yields. And this counters the Fed easing, and it could spark credit risks. Fed's just going to have to turn on the money printer to save the country. Because if they don't, well, then the country just gets destroyed, and then the world gets destroyed. So if they don't do it, it's the end of the world. They will do it for that reason. And the Bank of Japan hiking while the Fed is cutting, I mean, that's just narrowing the differential in between those two yields, so the trade no longer makes sense. And when you're in a leveraged world, you got to remember that a lot of these trades are being done on margin. When you do trades on margin, you got to pay margin interest. So already the spread is being narrowed more than it was before. All right, so you're making less money on it. It's just not mathematically sensible to do anymore. A treasury yield here in the United States, well, in a panic like this here, that could hit 5% on the 10-year treasury, and that would really rock things up here. That would really rock the world. You'd see the Federal Reserve going into an emergency meeting. They would do it even on Christmas Day if it happened that way. I mean, I don't think it would, just because, like, all the markets would be closed on Christmas Day, but Christmas Eve, the markets are open. And if you see treasury yields at 5%, they're calling an emergency meeting, they're doing aggressive rate cuts, and they're turning on the money printers. Yeah. The unwind is also going to drain liquidity outside of Japan. Why did the Federal Reserve decide to end QT, quantitative tightening, right now this month? That's why. They don't care at all about anything else other than having the option, the lever available to them to save the country if necessary, if this trade unwinds. They don't care about balance sheet management or making Trump look good or doing anything to help our economy right now. They're cutting it off right now to kind of signal to the rest of the markets, hey, we see what's going on in Japan. If something bad happens, if the trade unwinds, we will turn on the money printer to fix it. All right? That's the story there with the carry trade now. Yeah, let's talk about quantitative tightening here and just have a visual of what this has done to our little market here. This was another argument I had with Shill Gates. He's telling me, oh, no, the market, the cycle just sucked this time around because the market is maturing. Oh, Shill. You do realize that even in a mature market, there can be parabolic runs. Gold is probably the oldest asset on Earth, the oldest market on Earth, and it recently had a parabolic run where its market cap increased dramatically. So Bitcoin just being, 16 years old? Bitcoin just being 16 years old, that is not enough time to mature it to the point where we have a piss poor cycle this time around that is dwarfed by previous cycles to the extent that it's been dwarfed. Here is the reason why this cycle has sucked so much. Not just because the economy has sucked, but take a look at the effect of quantitative tightening on the markets in general. I mean, look at it. This was back here when they started it in 2018. When they started doing it and they showed that they were serious about doing it, it pushed it all the way down. It destroyed the bull run. And it destroyed the alt season that was going on in January. And just pushed the prices of everything right back down. Now, eventually the market adjusted and started going back up. But then, what was going on over here was actually, it was still some quantitative tightening in that sense here. Of like, it were actually, that wasn't quantitative tightening. That was balance sheet steady state maintenance that was going on here. This was the pandemic hitting, which caused it to drop. They turned on the money printer, and look, boom, we go up. Now, even like before we had the money printer turned on, even before that, we were coming back up here, because what happens is the market adjusts to whatever the conditions are. It's just that tightening and easing done by the Fed are such powerful, blunt weapons that first it knocks it down. You know, it's just like you're in a fight. You get knocked down really hard. Eventually, you're going to get back up. You might have to fight. I might have to fend off a few more punches and kicks to get back up, but eventually you get back up. You adjust to the scenario. That's what's going on here. Now, quantitative easing keeps going on here. Boom, 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 boom. And then, right around, it was actually right here when they announced that they're going to do quantitative tightening. They didn't really start doing it until the middle of the year 2022, but they were talking about doing it as early as March of that year, but actually even in February they were talking about doing it. That knocked the market right back down, and we had a very crappy 2022. But then, when the year flipped over, by that time, we got used to the quantitative tightening and worked our way back up. You can still see that this price chart is very suppressed due to the quantitative tightening. This thing looks like it's just being stepped on, being mashed really hard. I mean, for one, it's a log chart, so of course a log chart's going to look that way. But you can see the effect that tightening has on Bitcoin and the markets themselves, just because of how it's draining liquidity from the economy, and it's practically the opposite of money printing. It's just setting money on fire. So that's what's going on here with the quantitative tightening, and it's a good thing that they stopped it. And I think that the lack of quantitative tightening that we see right now, that is also part of the reason why Bitcoin has gone up as it has. But there's another reason why it's gone up. Look at this here. Look at who's been buying, because we can see who's been buying all the Bitcoin. The largest purchases that occurred back on yesterday, the largest purchases that occurred were these purchases right here. Large ones from Wintermute, Binance, Coinbase, BitMEX, and Bitfinex. And to say, well, what do all those have in common? Well, one's a market maker, but then the other four are exchanges. Why would exchanges be buying up so much Bitcoin right now? I mean, don't they know that it's the end of the cycle? Don't they follow Shill Gates? Because he told them it's the end of the cycle and it's going to do nothing but go down for the next year. So why buy all this right now when you can just wait a few months and get a much lower price? Why do that? One, the 4-year cycle is bull crap. I mean, the cycle is true, but there's no 4-year element to it. I'll just say that because waiting to use my argument winner on that here. I just got to find somebody to argue it with. But there's no 4-year in the 4-year cycle. There's just the cycle, and it takes however long it needs to take. But that's one thing. But then second, they would only do this if they were to anticipate a whole lot of demand coming in for Bitcoin. They are expecting 2026 to be a really good year for Bitcoin. They want to get ahead of it. They want to have a huge supply of it so that they can sell as much of it as they can to their new customers that they're going to be getting in 2026. They're going to mark it up first before they sell it. Here's the thing, is like everybody says, well, retail doesn't make the market. It's the institutions that make the market. Yes, institutions are very influential, but retail pays higher prices. So when retail investors come in and pay those higher prices, it pushes the prices on order books higher, because most institutions, when they buy over the counter. They don't buy on a public order book. So these exchanges buying all this Bitcoin is a very bullish sign. Let not your heart be troubled. Here's another thing that if I was able to get Shill on this stream here, this is the first thing I would show him. What this chart shows you is all of the different coins in the market and how they've performed since January of this year. That is not a bull market year. Look at the proportion of coins that have done well. Only about maybe 7 or 10 of them here. And look at all the ones that have done horrible. There's a lot more coins that we could add to this list that have done horrible. That is not a bull market year. So, Shill, got nothing but respect for you. You are 100% wrong when you say that 2025 was the bull year or that the cycle is over, because here's the deal. I mean, if you say it like this, Shill, you're right. If you say the cycle ended in December of 2024 or the cycle ended January of 2025. Well, in that case, I'll agree with you. You're probably right there. But if you're saying that it ended on October the 6th, you're wrong. And here's the chart that shows it. This is not a bull year. This is a bear market year. There's the proof. I get a little fired up here about this because I'm so tired of having to correct the people that are spreading not just misinformation, but are spreading piss information. They're constantly spreading that false chart all over X that says, oh, there's no longer a correlation between Bitcoin and global M2. Did you adjust for currency exchange rates when you did global M2? No. Well, you should, because if you do, the chart will show that the relationship is intact. That's why it's intact when you look at US M2. For God's sakes, will you please
control yourself?
Maybe I need to have that said to me right there. Margaret, what should I do here?
Control yourself!
Yeah, maybe I should. Am I getting too angry? They'll tell me in the chat here. I think maybe I am getting too angry. There's a time to get angry, and that time is now when people are spreading a whole bunch of piss information. So, the thesis is the bull market ended December 2024, and 2025 was the bear market year. Anything else is just FUD, and you need to shut the FUD up. And there's something interesting here about the carry trade that was discovered by this fella here, this Holger Shapitz. He says that at first, the decline in Japanese yen pushed Bitcoin down. But since then, it seems that like Bitcoin is now moving in lockstep with the yen, which makes sense. You see, when you look at that whole global M2 chart that shows a divergence between Bitcoin and what is supposedly global M2, what's failed to be accounted for is not just the exchange rates, but most of the global M2 being printed is in China. Now, what does Chinese money go and buy? Does any of those new yuans go into financial assets? No! It goes into real estate because the Japanese economy is largely run on real estate. Their retirement system is backed by real estate. They constantly need to push real estate prices up. I mean, the housing bubble that we're experiencing here, some of it is also due to what they're doing over in China with their real estate market, because there is a housing bubble over there in China that they have to keep going, because that's what a lot of people in China retire on. They don't have a social security system like we've got. They don't have retirement systems here like we've got, like 401ks and 403bs and IRAs. So they have to keep pushing and printing money to funnel into real estate, because that's what a lot of Chinese retire on. And because it's going into real estate, none of it is going into financial assets. It's not helping China, by the way. Like, all the money printing that they're doing is just making life worse for them, because it either needs to go into a income producing asset or a asset that produces a real financial return. But you see, the deal with housing, unless you're using it for rental or whatever, the deal with housing is that no matter what the money printing situation is, prices of homes usually just keep right in line with inflation. So when you sell your home for a capital gain, typically you haven't made a real gain when you factor in inflation. All right. Matter of fact, most of the time you make a loss when you sell your home, because when you factor in all of the maintenance costs, the interest costs, the property taxes, and the insurance costs, you didn't make a profit. You came out behind. It's typically how it goes with real estate. So it's not helping anybody out there in China. It's not helping the world. But when you look at money being printed by the Federal Reserve, or money being printed by the Bank of Japan, or money being printed by the ECB, that's money that typically goes into financial assets. Because what do those three economies have in common that is not true of China? Well, what those three economies have in common is they have more robust capital markets. There's stock markets, there's bond markets, lots of money raising, huge financial sectors, whereas China is mostly an industrial sector economy. And when they print money, it goes into the industrial economy as opposed to financial assets. Because, when you want to invest in stocks, first thing you think of probably is the New York Stock Exchange or the S&P. That's all American. And if you think about it really hard, you might think of the FTSE, which is the European stock market, or possibly the Nikkei, which is Japanese. You don't think of the Chinese stock market, because not that many people go there, not that much money goes there, because it really doesn't do much over there. So China can do all sorts of money printing, but if it's just going into real estate or if it's going into industry, that doesn't help financial assets at all. That's the story with the M2 and everything. And this is proof of that. This is evidence of it here. Like, remember I said, if you put the price of Bitcoin over the growth chart of USM2, the relationship looks 100% intact. You put it over the value of the yen, the relationship here looks 100% intact. It's not an accident. It's proven exactly what I'm saying. I bet if we did this with the euro, it would be the exact same thing. The relationship is intact because the European, the Japanese, and the U.S. economy have large capital markets, and when their central banks print money, that money goes into financial assets. It doesn't typically go into industry. So gosh darn it, I get so displeased with all of the idiots on X that are posting that chart. Posting that chart showing global M2 and Bitcoin price having a divergence. I get so disgusted when I see that. And I'll tell you, man, I cannot wait until the new year rolls around and the money printer is turned back on and the real Bitcoin bull run, the real crypto bull run begins, because I am going to talk so much trash. Like I told you guys, like when I do that stream, you want to make sure your kids aren't listening on that one, because I'm going to talk so much trash. I'm going to name names, and I'm going to say more cuss words than I've ever said in my entire life when I'm calling people out. Because I guarantee you, what's going to happen is they're all going to look real stupid, and they're going to go rummaging through Twitter to delete their past tweets where they said the cycle was over. And I'm going to be, I got a whole folder of bookmarked tweets and screenshots that I've saved here to remind them of it. I'm going to be posting it all over their feed and saying, hey, what do you say about this now here? You were so sure that it was all over back then. What do you say now? And here's what they're going to say. That's exactly how it's going to go. All right. I cannot wait for that time to come. Let's talk a little bit about the liquidity situation going on right here. So you see, this here is that this is bank reserves that we're looking at, and or we're looking at banks' usage of the Fed's standing repo facility. It is being hit time and time again right here, like $26 billion on Monday, which is the second highest since the pandemic crisis. They're going to have to turn this money printer back on because, for one thing, this shows you like why 2025 and really this whole cycle has sucked the whole time. Because look at this here. This is not evidence of liquidity like we had all throughout the year of 2021. It's not looking very good on the liquidity situation. In fact, why don't we take a look here at the recent Federal Reserve balance sheet. Now, this hasn't been updated it hasn't been updated for December yet. It's always a week behind. So I think tomorrow when they release the balance sheet, it'll be interesting to see, did they increase it or are they still decreasing it? It's supposed to stop decreasing because they're supposed to have stopped quantitative tightening. When they're doing the tightening, it's decreasing. But see, they got it all the way down to 6.5 trillion. So let's see what happens with it from there. They say they're going to increase it by 20 billion every month. Then we got this here, Fed net liquidity. Net liquidity is staying pretty flat. It has been going down practically all year long. I mean, look at this here. We did have a little pop in it in April, a little pop here. But of course, the market performed horribly because of Liberation Day, or Retardation Day, as I like to call it. And then liquidity kept going down and down and down, and ever since July 20th, which I think was I think July was a good month for Bitcoin. But ever since then, just started taking a giant dump all the way down. Now, interesting right here, the last time that it had a significant leg up, going from, was it 5.742 trillion to almost 5.8. It was 5.79 trillion. Was October the 5th. What happened around that time? Anybody know? Anybody want to share this with the rest of the class? Who's the kid that's been doing their homework out there? I think you all know what happened in October, right around that time. Yes, the very next day, Bitcoin posted its new all-time high of 126,000. I'm telling you, people, I'm not wrong. You want to fade Cairo? You want to fade me and say, you don't know what you're talking about, Cairo. The DXY doesn't matter. Liquidity doesn't matter. Money printing doesn't matter. It's all time that tells the market what to do. Fade me all you want. It will cost you if you trade on your fade. Because Cairo's law is true. And that is every dollar printed, for every dollar printed, the final destination is a financial asset. When you see Fed net liquidity reverse, it's at a pretty low point right here. Lowest it was, 5.5 trillion right here. That's the Fed's balance sheet's just a little bit bigger than that. But the lowest that it had been about right here, this was really one of the suckiest times in the crypto market in general right here. It was October 26th. We'd just gone through a lot of a lot of downward price washouts. Yeah, I had the big 10-10 washout and everything. There's a reason I shout about this, why I keep talking about it, because I'm right. Because I'm right. All right. So we're going to take a quick short break here, and then we are going to get into some of y'all's questions, talk a little bit about the Fusaka update and the Richard Hart video. But first, take a look here at this. Why does crypto suddenly explode into unbelievable bull runs, only to crash just as fast? It's not luck. It's not random. It's macroeconomics. In decrypting crypto, you'll uncover the hidden forces driving every major crypto rally, forces tied to the global debt machine, central bank liquidity, and repeating market cycles. This isn't another blockchain basics book. This is the blueprint Wall Street doesn't want you to read. The playbook that shows you why crypto moves when it does, and how to spot the next bull run before it starts. Don't miss the next cycle. Read Decrypting Crypto. Arm yourself with the knowledge to ride the wave before it leaves you behind. Decrypting Crypto by Cairo Code. Available now on Amazon and Audible. All right. So, speaking of Ethereum, I think that the price just hit $3,200, right? Is that true? Don't look like it just did. It's kind of oh yeah, that's close. It's very close right here. Bitcoin pushing 94,000. Actually hit 94,000 last night. And Ethereum is pushing 3,200. Let's see if we can watch it happen live right here. Looks like it might happen while we're on the stream, which it doesn't impress me yet. But for Ethereum to be doing anything green, it's a good thing. It's a real good thing. I'm hoping that this whole Fusaka thing is a big deal in saving Ethereum from the stupidity of the foundation and the stupidity of Vitalik, who just doesn't take his position very seriously. Like, the guy acts like he has no plan at all. And that whole scandal where they said that the tweet that said believe in something right before they dumped on all the investors' heads, that was absolutely disgusting. Well, what's this Fusaka upgrade right here? Well, the Fusaka is Ethereum's second major hard fork after the Pectra. And what it does is it allows validators to verify blockchain data by sampling small random portions instead of downloading everything, and reducing the bandwidth requirements by up to 85%. Layer 2 transaction costs are expected to drop 40 to 60%. I think that sucks. Because all that does is that just encourages people to go use Arbitrum, Optimism, and Base. Maybe even Polygon as well. That does not encourage people to use Ethereum. So why are they doing this here? I don't know. Like, why would they do anything to encourage Layer 2 usage? Makes no sense to me. Block gas limit increases to 60 million. Yeah, that's a good thing. It's a good thing, as we see why that's helping the price here today. But I tell you, man, all this stuff that I'm seeing here, these are like some really stupid decisions by Vitalik and the foundation. And I don't understand at all why the crypto media does not call him out on his crap. Like, why they do not ever say, hey, why are you dumping on people's heads? And I'm like, they go to bat for Ethereum all the time. They act like it's, something that is, it is a great accomplishment in compute, absolutely. But the merge back in 2022, that was being hyped as, it's a triple halvening. Did the price go up any? No, it didn't. So nobody cares. Because here's the deal. Technology doesn't matter. Nobody is here for the tech. Nobody is here for the tech. Nobody cares about it. However, this update here appears to be helping out Ethereum, as the price has had its first positive action that it's had in a long time. All right. So they are attributing today's positive price action to the upgrade. I'm not so sure that I want to do that, though. Not so sure that we can give it credit for that here, just because of what the stipulations are around the whole Layer 2 thing. All right, now we got to talk about Richard Hart and his new video. For the most part, all it was just something to promote ProveX, which is a sacrifice I'm not participating in. I'm not interested in that. Because, for one thing, I'm not buying any new coins or making any new investments until this carry trade drama is behind us. Because I got a feeling that when the carry trade blows up again, you're going to see Bitcoin go down real bad. It's going to make 1010 look like it's going to make 1010 look like November 2021. That's how bad the carry trade unwind is going to be this time around. $40,000 Bitcoin. And then in the Pulse Chain ecosystem, the prices that we're looking at right now, you're going to see a lot worse than what we see right now. You're going to see another zero added behind the decimal. Like the INC token, if the carry trade unwinded, you'd see the INC token at like 5 cents. And that would be an absolute steal to get to buy that. And when we look at these coins down here, it's possible that like you have 3 zeros on the Pulse Chain version of Hex, just like you have over on the Ethereum version of Hex. So it's all sub-penny pricing on most of the cores. So I'm not going to, one, sacrifice. I don't believe in sacrifices. I'm not going to throw money away like that. And two, when that trade unwinds, I don't have money then to go buy the blood here like you have, like you're seeing right here. I mean, it's going to get worse than this here, guys. I mean, I think that before it's all said and done, the whole community is chopped in half. Absolutely, the whole community is chopped in half. You're going to see a lot more jerks out there that are like Brandon Beebe and Jail Rat Crypto. You'll see a lot more Corey Costas and everything of people that are capitulating. But that's good when it all finishes, because one, it gives you the opportunity to become a whale in this ecosystem. And then two, they're going to be the ones that will be your exit liquidity when they go buy back in. Some other things that he talked about in the video is that he says he hopes the 4-year cycle is over. I can tell you don't have to hope, because there never was a 4-year cycle. It was always based off of liquidity. It's all about liquidity and the business cycle. I mean, the reason why this year sucked so bad is because, according to the ISM, we've been not in a recession, but we have been in a business cycle that is not taken off. So people don't have money to buy your coins. Why is that so hard for all the bears to understand? For these prices to go up, people have to buy the coins. For them to buy the coins, they have to have money. For them to have money, they have to have jobs. For them to have jobs, the economy has to be good. And according to the ISM, the economy is not good. That's so hard for these idiots to get through their thick skulls. I don't know why. So that's what has been the driving forces behind all cycles, behind all of the crypto cycles in the past. It's always been about economy and liquidity. He had also been asked about the Ethereum price that he bought in at, and all he said was a pretty common sense thing. Like, hey, can anybody predict what the price chart is going to do? No. I mean, he said it a gazillion times. He bought Bitcoin at like $30 and held it on the drop all the way down to $2. He could have capitulated then, but it's a good thing that he didn't, because he kept it, he held on to it, and now he's sitting on God knows how many Bitcoin. So a lot of people are thinking, oh, well, that's Richard admitting that he doesn't know what he's doing, so I'm going to sell out of all these coins now, and I'm going to keep wrecking the chart. And oh, how dare he accuse me of wrecking the chart and blame it on me, even though that's exactly what I'm doing by hitting the sell button. You can't, you just can't win with these idiots. Like when I have somebody on for a discussion, I don't really do debates, but like when I have somebody on for a discussion, I always try to make sure that this is a person I'm going to have that will have this discussion in good faith. And that's why I'm not going to have it with that one idiot, Sergey Baranov. You know that clown who's running around saying a whole bunch of crap on X? Yeah. So Sergey, I'm not going to have it. I was going to have him on here and everything, but he apparently doesn't want to have an honest discussion. He just wants to run around and talk trash. The same with Furu Doodoo Finance. He doesn't want to have an honest discussion. He just wants to talk trash. But when somebody that I know is going to be having a discussion with me in good faith, great. Come on here. Shill. The invitation is open. Come on here. Let's talk about the market cycle. You say that it's over because it has to be because 4 years. I got charts to show you otherwise. All right. So let's look at all your questions here. I know that SW, you sent a whole bunch of them in right here. Let's have a look at what those questions were. How does Pulse price go up without RH pumping the chart? Too many tokens were issued? Are you talking like too many tokens in terms of like the overall supply? Because, you know, like how there's 668 billion hex coins on Pulse chain, or you know, there's 1.6 or there's 137 trillion of the Pulse chain tokens. Is that what you mean? There's too many tokens issued? Because that doesn't matter. You see, the inflation of a coin does not matter for its price so long as whatever inflation it experiences is lower than the inflation of the fiat currency that it's priced in this case, dollar bills. Or are you talking about, well, he should only have issued one coin, and that was Hex. He shouldn't have issued Pulse and Pulse X and Ink and Prove X. That's too many coins, and that is divide and split the narrative. That's also a BS story. It's also a bunch of BS out there. Because, I mean, for one, it's very reductive to say, well, there was only a fixed number of people that were ever going to invest in any of Richard's projects. And because of that fixed number of people, there was also a fixed number of money. And now that money's been split up 5 ways and 6 ways now with ProveX. It's not the case there. There's still plenty of people out there who have not even heard of this stuff. All right. Next question that SW has here is, well, I mean, basically you're asking the same question here. What would you advise RH to do to pump the price of Pulse? Right now, don't do nothing, because there is nothing to sustain and support any pumping that you do. If he went and bought those coins right now, it would get sold right down with the environment that we're in. You have to wait until we are in a secular bull market. You have to wait until the money printer is going and the ISM is above 50, because then people are going to have excess money that they're going to want to invest, or they're going to want to save, and the bank will invest it for them. You got to wait until those conditions are right. Now, here's what I would say to him is like, do you still have the Ethereum? I don't think he sold the Ethereum. I think he just moved it into the mixers so that people would stop wallet watching. He explained a lot in his video last night about how Pulse being paired to Ethereum and also Hex on Ethereum is paired to Ethereum. When Ethereum goes up, that's also going to push up the price of his assets as well. So we don't even need people to buy our assets. We don't even need him to buy it for the price to go up. It's just going to be Hart's Law in action when Ethereum starts going up. Your next question here is about Ethereum, which, let's see, it says, Would it not pump if RH pumps the price when ETH is above 5K? I mean, just ETH being above 5K is going to pump the price whether Richard moves it into his assets or not. So we're not really, I'm not expecting him to sell anything from the treasury and put it into Pulse Chain. I'm not expecting him to do that because, for one, maybe sure he could do it, but that's just not what the purpose of these treasuries are. The purpose of these treasuries is for real emergencies, like what Sonic, formerly Phantom, went through with that whole multi-chain fiasco. And we got to understand here, like, if you're thinking that the only reason to invest in these coins is because of buybacks, I mean, if you want buybacks, go invest in Astra, go invest in Hyperliquid. You're not investing in those. Gee, why aren't you investing in those? Well, because people immediately sell down any buyback that occurs. That's why. There's nothing inherently good about buybacks because it just attracts the wrong type of people. So the reason to invest in any coin at all, you gotta nail this down here and recognize this. The reason to invest in any coin at all is not because the founder might do some buybacks of it. The reason to invest in it is because you believe there will be a lot more investors in it in the future. A lot more new people coming into it. It's a matter of the number of people that know about it now versus the number of people that will know about it and want it in the future, all right? Oh, yeah, there's also something I wanted to say about the PROVX sacrifice. Because everybody got so incredibly pissed off that you couldn't sacrifice Pulse Chain assets or any of the core tokens. You guys know why that was the case. Why was it? I mean, I know the haters, they're going to say, well, it's because he don't believe in his own assets, and that's why he wouldn't take them in the sacrifice. No. Because you people have proven that you can't handle rewards for trading in your core coins. Here's how stupid so many of you haters are. I know you guys were the exact same people that pulled this stunt way back when this happened. Remember when the ink farms or the Pulse X farms that gave you ink? Remember when there was a farm that included Hex on Ethereum? What did a bunch of you idiots do? You idiots did an emergency unstake for your Hex on Ethereum, which was a fixed yield, and you pushed down the price to go into a liquidity pool or a liquidity farm that didn't have a fixed reward schedule and get just a little bit of ink. You guys wrecked the price chart of an asset. You took an enormous penalty and you gave up what was a locked-in yield to go chase a yield farm that didn't have a locked-in yield, and it's going to change day to day, practically second to second, for a new coin that Richard said he didn't even like, the ink token. So good God, you people have shown that you can't handle any rewards given for those core coins. And I'm talking specifically about the haters that are complaining about the core coins not being accepted for the sacrifice. I'm talking specifically about them. Also, what do you want Richard to do with the sacrifice money? You want him to use it to buy the core coins, or you want him to use it to buy this new PROVX token. But in order to do that, he's going to have to sell down the coins that you give him. You want him to sell down the core coins to pump a new coin? Y'all are bitching that, oh my God, he's asking for me to sacrifice for a new coin when his old coins are still down. Well, if you were sacrificing his old coins for the new one, they would go down further when he has to sell them to pump the new one. It would just be an admission of a failure anyway that he's not going to do. So I really don't even argue with these people anymore. I just mute them. So I don't even block them. I just mute them because I think it's much more fitting for them to believe that they're having a much greater reach than they actually are. I think it's much better for them to be talking to a wall. Like there's one hater out there of mine that he keeps posting under like every single one of my posts, and I never see anything that he says because I have him muted. As I can see is like I can see the comment count. I guess he's like the first one to comment, but I can't see the comment. I can just see like one comment on your post right here, but I can't see it. Like I know it's him. I got one more question right here from Daniel, and he says, is it Daniel Villalobos? Hello, Cairo. What are your thoughts on the crossover of increasing unemployment and crypto markets in general? They are absolutely related, particularly when you look at the demographics of the unemployed people. A lot of those people are the most likely to invest in crypto type people. As you know, it's everyone born after 1980 or later. Those are the ones that are experiencing the greatest unemployment. Like youth unemployment is really bad. Gen Z unemployment, millennial unemployment, it's real bad. And we can't have that. We got to get these people getting into jobs and getting income so they can come buy our coins. Because if people don't have income, how are they supposed to buy these coins? Shill, that is entirely the point that I would make to you if you were on this stream here with me. People got to have money to buy the coins, and they don't have the money because they don't have the jobs, and they don't have the jobs because the economy is bad. How all these people out there cannot make this connection is incredibly baffling to me. I mean, what do we all got like? Do y'all have a sub 100 IQ? But next year, we do think the economy turns around because you have a lot of good coming. You got a lot more stimulus from the not necessarily the tariff deal. Oh yeah, we got to talk about the tariffs coming up right here because I think they're going to get overruled. But there'll be larger tax returns. That was also a story I saw from Scott Bessent had said that much larger tax returns will be going, refunds be going out to a lot of taxpayers, which is great. Because like some things that have already gone into effect is, like the overtime deduction and the no tax on tips. Like those things are going to put a lot more money into people's pockets, get a lot more liquid money out there in the economy and circulating. And some of those people are going to want to save that money. When they save it, it goes into financial assets. So it's not quite money printing. It's just giving money back to the people. And, also the spending of the Treasury General account is finally starting right here. As a matter of fact, I can show that to you. I was looking at that earlier. Did they start spending the money in the Treasury General accounts? Yes, they did. Because last month, it was at its highest of $953 billion, and they have spent $50 billion of that so far. Still got a lot more that they got to draw down from it. I got a lot more to do right there, but it is starting. And once it does, when they got all of that drained down, when everybody's got their tax refunds going, and when the money printer is turned back on, guess what happens to the crypto market?
It's all coming back.
That's what's going to happen. It will all come back. All right, you guys, that's all I got to say here for today's stream. I'll only be able to stream once a week right here, and it will usually be on Wednesdays. So I will see you next Wednesday. Good night. That is it for us today, you glorious degens. Smash that subscribe button to join the rebellion, and follow me on X at ReinventIdeal for more unfiltered truth bombs between live streams. And if this was your first time listening, head over to reinventideal.substack.com, because I have a free gift waiting for you there. If you become a free subscriber, you'll get a free copy of my book, Your Parents Were Wrong, Debunking and Replacing Outdated Advice, packed with the wisdom to outsmart the system. It's absolutely free to join, so no excuses.